have applied for a mortgage. There are some things that you should not do after applying for your mortgage. Once you find your dream home and you've applied for a mortgage, it is so easy to get excited about some of the things that you want to do to your new home. But here are a few things to not do. You should not do. I repeat, do not do after you have applied for a mortgage. It is so easy to think about furnishing the house, buying furniture for the outdoor space, all these other exciting things that you want to do. Because I know when I bought a home, I thought about the pictures on the wall, the furniture. I started looking at magazines and going on Pinterest and getting ideas. But you have to put all that on hold until you have closed on your home. Here are a list of things you should not do after applying for a mortgage. As discussed earlier, here's a list of things you should not do after you have applied for a mortgage. These things may serve as a reminder for the process of when you're buying a home. Number one, do not deposit cash into your bank accounts. So cash is not traceable. So before you put any amount of cash into your accounts, make sure that you talk to your lender to find out the best way to go about documenting the money that you're putting into your account. Number two, do not make any large purchases like buying a new car or buying furniture for your new home. New debt equals new monthly obligations. Monthly obligations create new qualifications. So new qualifications equal higher debt to income ratio. If you have a higher debt to income ratio, your loan becomes riskier, and clients who may have qualified may no longer qualify because now their debt to income ratio is higher than it needs to be. So please, 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 no new cars, no new furniture. Just wait until you close on your home. Number three, do not co-sign loans for anyone, any other loans. It doesn't matter what it is. When you co-sign, you're obligated. That obligation also gives you a higher to debt to income ratio, which in turn, you could tell the lender that you're not the one making the payments, but they still have to count it against you. So that goes against you, even though you're co-signing. So please do not co-sign any loans for anyone after you have applied for a mortgage. No co-signing. Number four, don't change bank accounts. Remember, a lender needs to source and track your assets. That is so much easier to do if you have consistency amongst your bank accounts, right? So before you do anything pertaining to your money, yes, I know it's your money, but make sure you talk to your loan officer to make sure that anything that you do with your money or changing of bank accounts or transferring money from one account to the other is not going to affect your loan application. So just check with your loan officer before you make any changes to your bank account. Number five, do not apply for new credit. Whether it's a credit card, getting a new car, applying for a credit limit at a furniture store or a clothing store. When an organization runs your credit report, it impacts your FICO score, and you have to be very careful in doing those things. So your credit score determines your interest rate and may possibly determine your eligibility for your loan approval. So do not create new credit. Number six, do not close any credit accounts. Most buyers believe the less credit availability they have, the less riskier they are, and the likelihood of them being approved. That's not necessarily true. Your credit score is determined by the length and depth of your credit history, not just necessarily payments on time or just making your payments. They look at more than that in determining your credit score. Also, what is being looked at in terms of your credit score is the amount of credit that you've used as opposed to the amount of credit that's available to you. So make sure before you close any accounts you're getting with your lender. And if you are with a good lender, that lender will give you a history and give you a class and also explain to you what you can pay down or what you need to pay down, what has to be paid down in order to improve your credit score. And they'll give you wiggle room as to what you can and cannot do. So before you make any changes to your credit, make sure that you get with your lender after you have applied for a mortgage loan. Bottom line, if your income, assets, job status, or anything has changed financially in your life, make sure to discuss it with your loan officer to ensure that your loan will still be approved. But the best plan is to be open with your loan officer and discuss any moves that you're making that will affect your financial future. If you found this video helpful, don't forget to subscribe, like, and hit the bell button for notifications of new videos. See you next time.